Hello everybody, it's Tortoise Investing coming at you today with another best dividend stocks to buy and hold forever. But today we're going to be taking a look at two ETFs. The markets have been on an absolute tear this year. The S&P 500's up almost 19% and the Nasdaq is up almost 36%. So a lot of people are, looking at ETFs because a lot of these individual stocks have ran up so much. So I'm going to be bringing in two today that I feel meet both a growth and a dividend investor's need. So first one is going to be FDVV stock ticker. This is Fidelity's high dividend ETF. I like this one a lot. I like the top 10 holding in this one a lot. The expense ratio is 0.29%, so not too bad there. If we take a look here at the holdings, their top 10 holdings are Apple, Microsoft, Nvidia, JP Morgan, Procter & Gamble, PepsiCo, ExxonMobil, Coca-Cola, Chevron, and Philip Morris. And these make up around 31% of the total holdings. So the top 10 is pretty heavy, especially there. If you look, the top three, we got 12, 13, 14, 15, about 15%, 16% in Apple, Microsoft, and Nvidia alone. And these have been on absolute tear this year. Now, if we take a look at the dividend history behind these, FDVV pays a dividend yield of 3.47%, and it's got a dividend growth rate of 13.91%. So for you dividend lovers out there and you want something that's got a nice yield, nice growth, and still gives you a good bit of tech exposure, I feel the FDVV can meet your needs with that. Next up, now this is for my growth people. You want a little bit more growth. You don't care too much about that dividend. I like IWL. This is the iShares Russell Top 200 ETF. This is the basically the S&P 500, except instead of the bottom 300 being like less than a percent, this mainly focuses on the top 200. And so if you take a look here, it has beaten the S&P 500. This has outperformed VO for pretty much ever in a day. So again, if you're looking for something that's growth and it's not as volatile as, let's say, the QQQ, I feel that IWL can meet your needs with that. It's got a low expense ratio, 0.15%, so not too bad there. And if we take a look here at the top 10 holdings, it's pretty much what you would expect. Apple, Microsoft, Amazon, Nvidia, Tesla, Google Class A and C are both in here. Meta, which is Facebook, Berkshire Hathaway, and United Healthcare Group. So again, this is basically the S&P 500, but it's the top 200 holdings. Well, it says 194, so the top 194 holdings. And I like that because, the S&P 500 is the market, and the market usually does really well. And if you take the top portion of that, you get this, and you get something that's market beating, outperforming. And, you get a nice little dividend to go with it. If we take a look here, it's got a 1.34% dividend yield, so not as high as as VOO, that's the S&P 500 one. I think it's like 1.6, but you get a nice little dividend growth right here at 12.8%, and you get something that's market beating, so it outperforms the S&P 500. So yeah, I like this. I think that the sector setups on both of these, honestly, are pretty well balanced. I like them a lot. Again, I'm not telling you to go out there and buy these. This isn't financial advice. Just letting you know that these are out there. If you're been looking at individual stocks and you're just like, oh my God, everything's ran up into the moon and then some, look at some ETFs. It's not a bad idea. But yeah, just a short and sweet one for you today. I hope everyone has a great weekend, and until Monday, see yous.